Welcome in everyone to the Real Estate Tax Playbook, where we will be discussing all things real estate, providing timely and precise tax information to our real estate professionals, helping them build their own custom tax planning playbook. I'm your host, Evan Ross. I'm a tax director in the Roanoke, Virginia office of Brown Edwards and Company. For those of you unfamiliar with Brown Edwards and Company, please go check out our website. A link to our website can be found in the description of this podcast. You'll find more information on our service lines, locations, as well as our providers. With all that being said, I would like to introduce to you our guest for today, Scott Bragg, also with Brown Edwards and Company, based out of our Bristol, Tennessee office. Scott, thanks for being here today. How are you doing?
I'm doing good. Yeah, thanks for having me.
I really appreciate it. So before we get too into the topic for today, can you just provide a little bit of a background on you and the services you provide for Brown Edwards?
Sure. Yeah, I'm a tax senior manager, like you said, in our Bristol, Tennessee office, right on the border there. So we actually just moved from Virginia to the Tennessee side of Bristol. Um, but yeah, I provide tax planning, preparation services, all things tax in our Bristol office.
Very good. Yeah, I look forward to seeing the new office. I know y'all been there for a little while now, but I'm looking forward to getting down there. So very good. Well, with all that being said, let's get into our topic for today. Hard to believe it's been, I think, a little over 2 years now since the Inflation Reduction Act, IRA as we'll call it, was passed into law. So can you kind of just provide a little bit of a background on the Inflation Reduction Act and how that relates to the real estate industry?
Yeah, so it was meant to incentivize investment in clean energy, technology that uses renewable sources, things like electric vehicles, solar panels, energy from wind, things like that. Um, it's been in law for a little over 2 years, like you said, but 2023 was really the first year that we got to see it in action as far as on people's tax returns. So it's been a successful program as far as what the IRS is reporting. I've read that the tax credits that were claimed for the 2023 year are in excess of $8 billion. dollars. So a lot of taxpayers have been able to take advantage of these credits so far.
Well, yeah, I didn't realize that many people have taken advantage. So definitely becoming more popular with these new incentives. One that I've kind of seen a lot. You mentioned it, solar panels, but I've seen that a lot from the professional side as well as on a personal basis. So a lot of clients are taking advantage of that, installing solar projects, and then I've had a number of just door-to-door salesmen coming to my personal residence asking me if I'm interested in investing in solar. So it's definitely a very relevant topic right now. Can you kind of go into a little bit more detail of what the solar credits look like now and how taxpayers are taking advantage of that?
Yeah, the credit that relates the most to the solar panels is it's a Section 48 credit, energy investment credit, and that was a credit that had existed prior to the IRA, but was extended and modified a little bit by the IRA. So it was set to expire at the end of 2021, and then with the enactment of the Inflation Reduction Act, it was extended until the end of 2024. And then at that time, there's a new credit, Section 48E, that'll take over and goes in place from 2025 until 2032. So that credit is for the investment in energy that comes from renewable sources. So solar panels are definitely the biggest, and what I've seen really, I think exclusively, as far as my practice, solar panels are the things that taxpayers are using to take advantage of that credit the most. But it does also include energy from geothermal sources, wind energy, things like that. Um,
And what is the solar as far as dollar amounts or percentages? What does that kind of look like on the for the solar specifically?
yeah, so it's a 6% credit on the cost of the project. That's the base credit. And then it has the possibility to move up all the way to a 30% credit. So if the conditions on that are, it's a 5 times multiplier of that 6% credit if you meet the prevailing wage requirements and the apprenticeship requirements, which are just, are you paying a wage that's a prevailing wage is set by the Department of Labor, and are you using qualified apprentices on your jobs? If you meet those standards, or if your project is under 1 megawatt, then you can qualify for that 5 times bonus, which will give you the 30% credit on the cost of the project. As far as that 1 megawatt, that's actually pretty high. It may sound low because it's just one, but that's enough power to run 2,000 to 5,000 solar panels. So you'd have to have a really big project to go over that. So most of the projects that are going to be seen by some of the smaller mid-sized businesses are going to be under that 1 megawatt, and they're going to qualify for that bonus piece of the credit.
Yeah, it definitely seems like a lot of people are taking advantage of it at this point in time. And with the high upfront cost, my understanding, I think that's a great way to incentivize, hey, if you got to pay X amount of dollars up front, well, this credit's a way to kind of help out with that. So,
That's right.
and is there any depreciation incentive on these projects, or are you kind of just out of luck as far as depreciation goes?
Yeah, so the basis, what you would normally depreciate on these projects, is reduced by the amount of the credit. So the depreciation is still available on the basis that's remaining, but it is reduced based on the amount of the credit that you receive.
Great, great, cool, very good. Another one, I mean, I know that's been around for quite a while now, but 179D, that's been in play for a number of years. But obviously that it got expanded, increased a little bit with the Inflation Reduction Act. Can you go into a little bit more detail on 179D and kind of what that looks like since the Inflation Reduction Act?
Yeah, so like you said, that does date all the way back to 2006. And the 179D is a deduction that was available for making certain commercial building property more energy efficient. And it relates to systems of interior lighting, the HVAC and hot water systems, and then the building envelope, so roofing, windows, things like that. Under the old law, that deduction was available for 63 cents per square foot per system. So 63 times 3 was the maximum amount that you could get, and that was for producing an energy savings of 50% on what your building was using in energy versus after the project. Under the Inflation Reduction Act, that's been reduced to where the deduction is available starting at a 25% energy savings. So that's a 54 cents per square foot credit once you reach that 25% mark, but then it goes up by 2 cents for every additional percentage you save until you reach that maximum of 50%. So people who are installing projects that reduce the energy by 25% can now get that deduction. Incentivizes, at least trying to do something, and then the credit can grow from there up to the point of the 50% energy savings.
Very good.
Similar to the energy investment credit, it also has those prevailing wage and apprenticeship bonus credits where I'm sorry, deduction, not a credit in this case. But it can grow from that, what would have been $1.07 per square foot can go up to $5.36 per square foot. That would be the max if you reach the 50% energy savings and then hit both of those bonuses. So a pretty big increase from where it was prior to the IRA.
Yeah, $1.07 to over $5. That's a pretty big increase. And just to clarify, I think you mentioned it, but so the 179D, that is a deduction and not a credit?
That's right.
Okay. Very good.
Yeah, so the difference being for anyone who's not familiar, that a deduction would reduce the income that you're paying tax on, whereas a credit would be a direct reduction of your tax liability. So almost similar to cash, a credit just directly reduces the amount you'd pay in tax.
I find sometimes people get a little confused on deduction versus credit and kind of can sometimes use them interchangeably when they are very different. So
Right.
Very good. So those are the two big ones that I've seen. Are there any new credits that have kind of come out with the Inflation Reduction Act that people should be aware of?
There are a few new ones, and one that could potentially relate to the real estate industry in particular is there's a new credit that's been established for installing um, electric vehicle charging stations on your property. So this could relate to a commercial building or a type of commercial property where if you place a charging station in place for an electric vehicle, um, it's a credit similar to that energy investment credit, the 6% base, and then could go up to a 30% credit. And that's for uh, property that's placed in service in a location that's considered a non-urban area based on the last census. So that information is available on the IRS website where you can go to see where those locations are, but trying to incentivize some putting the vehicle charging stations in place in areas outside of the normal metro areas.
Assisted living facilities reaching out. A lot of their tenants have been reaching out saying, "Hey, can we put in a charging station?" A lot of people are investing in more of the EV vehicles. So just from my perspective, I've seen a lot of that on the assisted living and retirement home properties.
Yeah, that's a big area. And then I've also seen, municipalities or say colleges and universities that may want to install these on campus. A lot of those campuses would fall in this non-urban category. And another thing the Inflation Reduction Act did was allow tax exempt entities to be able to claim some of these credits. It created a mechanism where um, you could either, if you don't file a tax return, you can file a 990 for a nonprofit entity, or if you normally file a 990, claim the credits and receive what they're calling an elective payment. So very similar to a refundable tax credit where the tax exempt entities can receive cash for these credits, even though they don't have a tax liability per se. They can still receive the equivalent of the credit for installing this type of property.
Yeah, I see projects going on college campuses, new projects and stuff like that. So it's nice that the government is allowing those organizations to be able to take advantage as well. So one thing I did want to mention that's a little bit confusing is kind of the transferability. You hear that a lot with the Inflation Reduction Act and some of these credits. Can you kind of go into a little bit about how that transferability works and what that looks like?
Yeah, so in a way, similar to the elective pay, the transferability was also created by the Inflation Reduction Act and will allow taxable entities to transfer these credits between each other. So if you are a taxpayer that maybe has a project that qualifies for a credit, but you have been taking on losses and don't have a tax liability, or one reason or another, you wouldn't be able to use this credit. You have the ability to transfer that credit to another entity that may be able to use it through a sale. Um, the taxpayer that could use the credit could pay a discounted price to receive the credit, so that the seller, the person that can't use it, would be able to receive that cash. Less than the credit amount would have been, but at least they're receiving some benefit to be able to take advantage. And then the person that bought it, of course, gets the credit, and they paid less than they'll actually receive in tax benefit. So that's something that was created under the IRA, allow those credits to be transferred between taxpayers. Um, what I've heard out there in the marketplace so far is a lot of firms are seeing anywhere between 92, 95 cents on the dollar for these credits so far.
Yeah, yeah. Similar to what you see with some other tax credits that are out there, but
Yeah,
so that's good to know that information. That's kind of the roughly the going rate as of right now. So
yeah,
obviously, a lot of our listeners out there are real estate professionals, investors, developers. One other thing that I'm sure on a lot of people's mind, it's on my mind. There's the upcoming presidential election in November of this year. For a number of reasons, I'm sure a lot of people want to know what's going to happen. But as far as the Inflation Reduction Act, Is there anything on the horizon or things that our taxpayers should be looking out for with the presidential election?
Yeah, so there's been a lot of talk out there. This was a bill that was passed with zero Republican support. It was passed through reconciliation by the Democrats. So there has been some talk about are there any pieces that should be repealed? Are there any, do they want to try and repeal the whole thing? So that's been part of the campaign. But a lot of the conversation has also been these tax credits are being taken advantage of in a lot of the areas that are covered by Republican senator, Republican congressman. So there has been a little more shift towards bipartisan support. So there's not a lot of appetite for full repeal. I think I saw just earlier in the week there were 18 House members that sent a letter to the Speaker asking him to not there would be no repeal of any of the tax credits that were involved in the bill. So you're seeing sort of some growing support from the Republican side as well. A lot of the talk about repealing certain pieces of the act has come around the electric vehicles piece. So that's one that might be in danger more so than any of the ones that we talked about that are related to real estate. Of course, the Congress people from the states and areas that are focused on fossil fuels, there's not a lot of support from them on the Inflation Reduction Act. But it seems like there is enough support overall, and there's been enough investment in these types of technologies in those areas that it has the potential to stay in the law. But you never know what's going to happen, and even as we get closer to the election, it's something to keep an eye on because things can change from one week to the next.
Yep, obviously we'll definitely keep up to date on all of that. As far as the Inflation Reduction Act, it was obviously passed into law in August of 22. Is there any sunset or time period on the Inflation Reduction Act on a lot of that legislation, or was that in there?
Most of the provisions go out to 2032. That's the expiration for most of these credits. I can't think of any off the top of my head that are expire sooner than that. But that's the date you're seeing on a lot of the credits that we've talked about.
Very good. Yeah, so barring no changes, which that's always up in the air with politics and especially in an election year. But so there's plenty of time for taxpayers to still take advantage of a lot of these credits. So not going away as of right now anytime soon.
Right.
So awesome. Well, very good, Scott. I mean, a lot of good information today on the Inflation Reduction Act. I really appreciate you coming on, being a part of the podcast. Before I wrap up this episode, you mind just giving our listeners kind of how can they get in contact with you if they have additional questions, follow up on the Inflation Reduction Act?
Yeah, anybody can feel free to email me if they need any more information, if they think they might have a project that could qualify for one of the credits we've mentioned or the 179D, and we can get you in touch with the right person. But my email address is sbragg, that's BRAGG, at becpas.com.
Very good. Well, with all that being said, that's a wrap for this episode of the Real Estate Tax Playbook. I appreciate everyone tuning in and listening today. Again, please make sure to go check out the Brown Edwards website for more information on our service lines as well as locations and providers. And also, please subscribe and listen to future episodes wherever you get your podcast. Again, I'm your host, Evan Ross. Look forward to bringing you more real estate tax content. Take care.